Good morning, ladies and gentlemen. My name is Vasil Dikov, Senior Account Manager with GDMFX, and I'll bring you today's market outlook. We're going to start with the North American markets. The events from yesterday, the new home sales for the month was 1.2% weaker than expected at 2%, and the new home sales for the month were 2,000 better than expected at 512 million. A widely watched gouge on the dollar strength rose to its highest level in a week Wednesday as the US currency drew support from the hawkish comments by Federal Reserve officials and benefited from dissipating nervousness over the Brussels terror attacks. Chicago Fed President Charles Severn said the US economy has good fundamentals. During the Asia trade, Philadelphia President Patrick Harker said the improved outlook increasingly favored short-term interest rate increases. The Dow was 6 points down, the Nasdaq was 38 points down, the Dixie was up to 96.17 from 95.78. The US dollar was 160 pips up versus the Canadian dollar and was 30 pips up versus the Swiss franc. Today we'll have the initial jobless claims, durable goods orders for February, durable goods orders excluding transportation from February, and on Friday we're going to have the GDP data from Canada. Moving on to Europe and the EU markets. In Switzerland, the ZEV survey expectations came out at 2.5. In the UK, in his address to the House of Commons Treasury Committee, London's Mayor Boris Johnson stated that a Brexit will not harm London's position as a key financial centre in the world. This is based on private conversations he had with top bankers from the London city. He also stated that the pound will be strong and robust, and stated on how being part of the European Union exposes the UK to greater threat from terrorist attacks and terrorists entering the country. As a result, the sterling slid further down versus the dollar and the euro. The FTSE 100 was down with 14 points, right now at 6,107. The pound was 110 pips down versus the US dollar, 100 pips down versus the Japanese yen. Today, we're going to have the retail sales excluding fuel for the month and the year, and the retail sales including fuel for the month and the year. In Japan and Asia, the rising US dollar weighted on Asia's stocks and currencies. The dollar gained overnight against a basket of major currencies after St. Louis Federal Reserve Bank President James Bullard suggested that there was a chance that interest rates could be raised in April. In China, Chinese Premier Li Keqiang said on Thursday that the government would move to ease tax and paperwork burdens on companies, but added that the country is inexperienced in implementing such reforms and there would be challenges. Li repeated previous statements that the country hopes to cut taxes by 500 billion yuan in 2016 and promote reforms on the value-added tax system. He also reiterated that China would not devalue the yuan exchange rate to boost exports, as it would not help Chinese firms become more competitive, adding that the government would continue to reduce overcapacity in steel, coal and other sectors while helping develop smaller private enterprises. He said China will use market tools to create new job opportunities to offset the impact of jobs destroyed by industrial overcapacity reductions. The Nikkei 225 was 112 points down yesterday. Today it erased yesterday's gains. The Japanese yen was down with 93 pips versus the Canadian dollar. Today we're going to have the Japanese CPI, the foreign investment in Japanese stocks and foreign bond investment in Japan. On Friday, the leading economic index for Japan and the coincident index. In the Pacific, New Zealand came out with impressive results in the export field and respectively the trade balance, both for the month and the year. The New Zealand trade balance for the month was 339 million, with expected reading of 50 million. The New Zealand trade balance for the year was minus $3.32 billion. The exports were $4.25 billion and the imports was $3.91 billion. In the commodities, the EIA crude oil stock exchange inventories rose by 9.4 million barrels in the week ending on March the 18th. Expectations were for 3 million barrels, while the API reported supply gain of 8.8 million barrels. Crude futures fell more than 4% on Wednesday, erasing all of their gains from the previous session, as domestic stockpiles skyrocketed last week, intensifying long-standing concerns related to the excessive supply glut on global energy markets. Prices were mixed in Asia on Thursday, with US benchmark WTI down, but Brent up as sentiment on efforts to curb production turning skeptical as several producers could stay outside of any pact to freeze output if reached. Gold fell sharply on Wednesday, tumbling to 3-week low as host of hawkish comments from Federal Reserve increased the possibility that the US Central Bank could approve multiple interest rate hikes by the end of 2016, weighing on the precious metal. The S&P 500 index had a range of 20 points in 2022 right now. Gold had a range of $34 down to $1,217. Silver had a range of 69 cents and $15.21 right now. Crude oil had almost $2 range at 31.31 now. Natural gas is trading at $1.78 in the moment with a range of 12 cents. Today we're going to have the natural gas storage change and the Baker Hughes rig count. That is for today. Thank you and have a good day.